All right, welcome. We're into February now. How quick that happened. When did this boot camp start? Like January 10th ish? That sound about right?
January 10th, I think.
Yeah. Wow. So yeah, we're 22 days later, and we're getting into trading. So yeah, it's going by. It's going by quick, and it'll go by quick. So the stuff we talk about today, we're going to talk about journaling today. And if you feel like you're kind of behind and getting into the journaling groove, just bear in mind how fast the days go by. What I don't want is anyone to get to the end of boot camp and say like, "Man, I kind of wasted this experience. I didn't do the things." But I will tell you, at the end of boot camp, there's always one or two people like that. And so, I, you know, if you're kind of behind, it's okay. But when you can find the time to catch up, I would highly consider doing that. Just making sure I got the right screen set up here. I think we're good. Oh no, I know what I want. Never mind. Upcoming schedule. Okay, let's go to the dashboard here. Let's see what we got coming up. Do. Are you guys? Oh shoot, log in. What's up with that? Why do you get logged out? Before we go to the calendar, are you guys all up to speed on the resource center? That's another thing. It seems like halfway through boot camp, some people still haven't really kind of discovered the website for some reason. But if you're ever looking for the recordings, they're divvied up fairly logically. There's Group A meetings, Group B. There's the trade book meetings with Mike. I handled this last night for Mike, and the Wednesday morning meetings. And I guess they're putting Thor's meetings in a separate thing here. And then I often just go to newest webinars and click here because it just chronologically shows. It's not just webinars; it's really everything. You can see the Team B, Team A meetings, the Wednesday meeting, the trade book meeting I did last night. It's all here. So sometimes newest webinars is just the easiest place to go. So yeah, if you haven't kind of discovered these links here, that's a good thing to know about. Apologies about Thor. Thor got the booster and it kicked his ass. And honestly, he slept right through the the webinar. He never woke up. So hopefully he's feeling better today. So we'll make that up. We'll get that rescheduled as soon as we can. It's not like Thor to do something like that. But let's go back to Trader's Home and the dashboard. Now we're in February, so we can just go to the February tab. And looks like the next thing coming up is, it's me. Developing strategic focus by trading a single strategy. I never liked this title because it uses the word strategy or a root of it twice. It really bugs me. But every boot camp, there it is again. Try to get Mike to change that. But yeah, I'm going to talk about trading a single strategy next week. That's kind of my bread and butter. And then we'll have Mike doing the trade book meeting, selecting the right journal criteria to evaluate your strategy. So a little bit more on journaling next week. And then the normal meetings. So Mike's daughter's soccer season has finally ended. I don't know if you heard him complaining in the Bearable Traders Room, if you remember today, but it's been wreaking havoc on his life, and I think it ended tonight or today. So that's what was causing some of the meetings, that and some of the COVID policies of his daughter's school that I won't get into, but they were causing us to do some of those 4:15 start times, but we should be back to 5 o'clock for the trade book meetings on Tuesday. So that's the schedule. As always, we change this thing as soon as anybody ever suggests a change. This thing gets usually changed within 15, 20, 30 minutes. So again, this is the place to go. It's a good thing to check up on every so often, just in case something did get changed. But I will try to inform you of all changes, but just be aware that it's there.
Uh,
Question? Here we are on the roadmap, moving along. Again, this is just a general discussion or general depiction of our path as we go through boot camp. But we kind of left the explore stage a little bit and starting the build stage of boot camp. So obviously we've started trading. Hopefully we've started journaling because that's what we've been talking about this week and kind of building up that daily trading practice. Perhaps some of us are not quite here yet. Pick a focus strategy. In fact, I know a lot of you are not. That's why it's not checked off at this point. We might not check that off for another week or two. We'll see. How do you guys feel like you're doing in this regard? How do we feel we're doing so far about trading our strategy and not being pulled into ideas that we don't want to get pulled into? Is anyone? This is the circle of trust, by the way, so we can say what we're doing wrong. But is there anyone out there feeling like they're having like an outside influence to get outside their strategy when they don't want to? No.
Yeah, I'll start.
Was that you, Isaac?
Yeah, I was going to say, I'm actually kind of, today being the first day where I'm pretty much the opposite of that. Like, today was the first day that I was actively trying to trade, but didn't trade anything because I didn't see the setup that I wanted to. And I felt pretty good just discipline-wise about that.
That's good. Yeah. Jeremiah?
Oh, I mean, I traded a ton. I had my best day ever by more than 2, especially out of the open. I usually I trade the first 2 hours, and then my rules try not to trade after that. I usually don't, but I did trade.
I'm on a call.
I did trade the futures off this bounce of the bottom here, and earned even more than what I did today. So yeah, in a really good space.
All right, good. Yeah. Well, I don't hear too many voices saying they're being sucked outside of it, but if you are, it's a common problem. And I mean, if it's happening, I trust in some of the voices you're hearing here that you hear Jeremiah saying he feels pretty good. Isaac's feeling pretty good. You feel pretty good when you trade what you want to trade, what you set out to trade for the day, right or wrong. Not right or wrong, but win or lose. If you win or lose by your strategy, I guarantee you feel better than when. There's nothing worse than losing after being pulled into someone else's idea that you kind of didn't have faith in, but you respected their opinion, perhaps. Risk reward, I know that there's some people still not doing this probably correctly. We have people going max loss on a single trade, and that really shouldn't happen, especially when you read into people's trade books and people kind of say like, 3 R's my max loss, 5 R's my max loss. Like, if that's the case, every loss should lose you how much R? Single loss should take you down 1 R, right? So it doesn't really make sense to have a single trade take you out down to max loss, unless your trade book said your max loss for the day was 1 R, and your risk 750 per trade. But that's not my recommendation when you're underneath a risk control structure that maxes you out at $750 loss. A lot of people blow it in the pre-market. I'll also tell you that. One of the dangers of the pre-market is that people get into positions that move against them, and then they wait for the open because they're hoping there's a pop, and it reverses all the damage they've done in the pre-market, and then it doesn't pop in their direction, and they take like a really big loss. So we've seen in previous boot camps people have like lose $5,000 in a day, and that can really only happen because they're making pre-market mistakes. They're going way too big in the pre-market, and they're even averaging down or averaging up, whatever. And then the market opens, it moves against them, and they just have ridiculously bad days. And they're really hard. Obviously, they've had $5,000 loss in a day. I mean, that's harsh. That's extreme. It would happen to some people. It's very hard to make up. So I won't belabor all of these. Kind of curious if this is going okay, but I've heard a few things about over trading. Some people mentioning they traded a bit more than they wanted to. So that's obviously all of these are common issues. That's why they're in this acronym here. But sticking to your strategy and your entry.
Just a bunch of chalk.
What's that, David? Hello? Okay. Yeah, and what we're going to talk about today is a bit more of journaling, kind of put a bow on this thing, and we'll talk a bit more about this E down here, endlessly refine, this with data part. We're going to kind of get into that a little bit, look at some of what the group members are doing in terms of gathering data. I'm not sure everyone is quite getting what this means, and I know there's some people out there who are not spreadsheet friendly, so it's never too late to start in life to understand what the hell Microsoft Excel is or some other spreadsheet program. But I do know that some people just haven't encountered that in life, but it's one of the better ways to do this exercise of gathering this data that we need to trade better. With that in mind, yes.
John, before you move on, can I ask a question about risk reward?
Yeah.
Since you, I found that like my risk is very low. It's only $50 per trade.
Mhm.
But I find looking at the high of day that I'll enter a trade and then it will turn not in the direction that I want it to.
Mm-hmm.
And I'll get out after 2 or 3 candles, like, whoopsies, not that. And then it will turn. Is it better to get out and take a loss that isn't a whole R? Or is it better to just kind of be like, hey, that $50 is gone and let it ride?
Say the last part again. To let it, if your risk is 50 and you're down 50, you're out of the trade, right?
Right. But I'm finding that like I'm getting out of trades at like $17 and 2 red candles because I'm like, oh, that doesn't look good. But then I've gotten out too soon. So is it better to take a small loss or is it better to actually get stopped out?
Is this on high days specifically?
Yeah, that's all I'm trading because that's all I can see.
Okay. Well, the way I trade is whether I'm going to stay in a high day break or not is very time based and it's very conditions based. So when I get into a trade, they're under certain conditions that seem favorable for me, that the probability is in my favor, that I'm seeing good volume and a good pattern and the market looks good and this is a good stock for the day, the spread's good, whatever. And I get into the trade and I think like this is a better chance for me to work than not work. But as soon as I enter, I got to consider what the situation is now. There's some stocks where on a high day break, the setup is so nice that I expect a 20, 30 cent pop, perhaps. Depends on the stock. And it breaks, but it breaks by 2 cents. And then it starts to fiddle around at the high day. Like that's a very dangerous sign for me, for example. And I'd be like, oh, wow, like, I've done this thousands of times. More often than not, that's a good pop. There's high liquidity. It was an exact dollar low and I expected to break and it didn't. It did this little tiny break and then it started to mess around. That's like danger sign number 1 for me. That's like, all right, this has to work out in the next candle or 2 tops, or I'm getting out of the trade, no matter, it could be the smaller loss. Or I get in and the market was trending, in my direction. I entered on a strong SPY candle as well that was in my favor. And then I'm in the trade and it's kind of messing around. I'm not at break even yet. It's just kind of hanging around. It hasn't moved, but it still looks okay. And then the SPY puts in like a giant drop. Hold on. I want to murder a cat. Hold on. Here.
For instance, Jahan, I remember on John's presentation, and you can actually rewatch his webinar on break of high of day. It's on the Big Capital Essentials training, but also already on the mentorship part with all the lectures that we have. Mm-hmm. And his conditions are really based on it's either starting to work straight away or time based. So you can also input those kinds of conditions on your strategy. You can even set a timer. Say like if 5 minutes after I enter, the timer starts ringing and the stock didn't make the move you were expecting, you can get out. It's just a matter of which conditions make more sense to you and are more comfortable. But at the same time, you also have to try them out and register the data to see if the data matches your best conditions possible.
Ricardo's what he's saying here is John's about to spend an hour talking about his webinar when there already is a webinar. So I'd recommend going back and watching that, Natalie. That was Natalie's question, right? Because essentially what I'm doing here is I'm starting to go into a rant about all my conditions and it's all covered in the webinar. What I really should be saying is the exercise you should be doing is this: collecting data. Because the answer for me is I will exit according to the conditions exactly after the entry, and it's very time-based. But you could find an answer that says, I trade his high day breaks. I look for a lot of the same things John does, but I always hold to my stop. It either works or I hold to my stop. And perhaps you wait for bigger targets than I do, and that's why it would work out. So the real deal is the reason you guys are here in boot camp is because you really have to develop your own strategy eventually. I know it's very tempting to come in here and be like, Eamon trades this, and Damon trades this, and John trades this. I just want to copy one of these things and move on with my life. But it never works. I don't know anyone who's been good at trading that has taken someone else's idea and just done that idea and made no changes to it, because psychologically it just doesn't work that way. It's because the reason I get out so fast of a trade has to do with my psychology. I let a lot of trades get away from me. I get in, I don't like it, it's not fast enough, and I'm out. And then it goes. A more patient person might get more money, but it's just you have to match your entry criteria to your head and what works for you, and that's why it really comes down to this idea of gathering data. So that's the correct answer. But if you are curious about the specifics, the webinar, the high day break webinar I gave is really the best place to go, because I'm really just repeating things that were in there anyway.
Perfect. Thank you, sir.
Okay, cool. So I wanted to talk a little bit. We got some ABCD traders in the group. I know that. I see you guys post your trades in the Slack channel every day, and it's a nice simple strategy that's related to other strategies like cup and handle on the high day break. It's sort of a variation on those. You know, it's a momentum break. You're just looking. We'll talk it to the long side here, but if we're trading something ABC to the long side, a lot of the conditions we're looking for to make this work are the same things that make a high day break work, make a cup and handle work. But I went into Andrew's book and I looked at this because, you know, it's kind of one of his bread and butter patterns, and it's one of the first ones he mentions in his book. And I thought, what does Andrew really say about the ABCD strategy? And it's actually not a hell of a lot in his book. His book covers a lot of stuff, so it's not a lot of depth on some of his strategies. And what it says is, we know the pattern, right? This is A down here, and then we have a pretty strong move up to a place called B where it tops out. And then it comes down and kind of finds a bottom, which you got to kind of judge, and you call that C. And then D is kind of where it really starts to break out, and the entry is somewhere here. So what the book says, there's a strong upward move, a surge from A to B. B is a new high a day. That's just the way he considered it in his book. I don't know if everyone treats it that way, that B has to be a high a day, but that's how his book describes it. C is potential support. It's higher than A, it's lower than B. You want some confirmation that the stock is not going lower. Confirm is a dangerous word in the world of trading, because it's, you know, we're trying to confirm, we're halfway guessing, you know, whenever we make these decisions. We want to enter between B and C, closer to C, according to him. You put the stop below C, because if it, you know, you start to get the move upward, you enter between C and D, you think you've seen the beginning of the move. If it comes back down, then your thesis is broken. That's the nice thing about ABCD, is like the thesis is really simple. You know, you start to see the move, you enter. If that wasn't the move and it breaks down through C, then that's your idea, that's your thesis broken. You sell half at point D and move stop to break even. So D is like a new influx of volume and a bit of a stronger move. I think this is supposed to say D. Buyers jump in near D, not B. As the volume increases, sell the remaining position at target, unspecified, or when sellers start taking over, or new 5-minute low. So that's what he's got there. Now, for you ABCD traders, what else would you want to think about for the, or anybody? It doesn't have to be an ABCD trader, but what other? This can't be everything, right? This isn't a lot of, this is nice, some basic instructions, but what else would you want to consider?
For instance,
Well, when the SPY is moving in the queue,
So the SPY or the Qs, yeah, like what are they doing?
yeah,
Okay.
I'd look at average true range, make sure I have enough space within there that I can actually expect the price to go that far.
Space to move, considering ATR, okay.
Volume, of course.
Volume, yeah. Like volume at entry or prior entry?
Both.
Watch it.
Actually, volume for the pullback as well towards B and how the trend is.
Like that, okay.
I'm also looking at the multiple time frame confirmation, meaning if I see exactly the same pattern on higher or lower time frames to give the extra confirmation that not just traders that are using this particular time frame are also seeing the pattern.
Okay.
Yeah, and if you're using moving averages, then usually point B tends to coincide with one of the moving averages.
Like
9 or the 20.
like it bounces down off B.
Well, yeah, it bounces from.
Okay.
And for me, the biggest thing is level 2, the bids and asks on level 2.
What do you like to see? If we're to go into the long side.
Right, I like to see a ladder to one side or the other, which is why I've been struggling. When everything follows the SPY, it's like level 2 doesn't even matter. I'll get into trade, it'll immediately go against me and go against the level 2 ladder. And, I'll kind of stick with it because I see all those bids or orders, depending on which side you're on. And, the last few days, it just doesn't seem to make as much difference as it normally does. And then you look at the SPY and you say, well, yeah, that's because, this didn't go short. It didn't fill any of those orders because the SPY just took off.
Mm-hmm. Okay. Yeah, but when you go long, you want to see the ladder to the ask side, right, Dwayne?
Right,
Yeah.
right.
Okay. Yeah. And to your point, it's been. I think you mentioned in an email to me, perhaps, or
Twitter.
Yeah,
on
it was
Twitter.
on Twitter yesterday. Yeah,
Yeah.
We're at extremes in the market. When you're at extremes, the market takes over a lot more than it does in between extremes. So, not extremes, it's not the right word. But, we were at an extreme all-time high, and we came down quite a bit. And at that all-time high and about that new bottom, the market does have more influence. That's my opinion, anyway.
When it works, it's great, but times like this, it's not.
Yeah, no, agreed. Okay, so just checking the chat. So we got some things here. That's not an all-encompassing list for sure, but you guys might remember I sent you this journal. So I sent it in Excel and I sent it as a Google sheet, and just as a template, because a lot of people were asking, like, how do you get started on this whole data collection thing that you talked about? And this is mine. So there's things here like, notice there's a column R for high a day, like, okay, well, that might not be applicable in this case, but we can take, what I want to show here is we can take this template and we can kind of add some of these things we talked about here, and we can make something for like an ABCD data collection spreadsheet. So my first column is just an ID for the trade. It's just a unique identifier. So it's like 220122. That's the second trade of the day. Would make more sense if that was a 1. But this says, it's 2022 January 20th, and it was the first trade of the day. And then as I trade, throughout the day, I'll drag that down and add more identifiers. I've got the date as well, which I could get from the ID. I just do both, but you don't have to do that. I've got the ticker. Does someone have me on speaker by any chance? Does anyone hear an echo?
I hear.
I hear an echo, John.
Yeah, if you could, check your speakers. Headphones work better, obviously. But the ticker makes a lot of sense, right? Of course. Whether it took the trade long or short, this factors into later auto calculations. Where I bought it, where I sold it, and this could be an average buy price and average sell price. You might notice this spreadsheet actually has a calculator built into it. So if I bought if I bought 100 shares at 8 and 100 shares at 7, and
John, do you want to try muting everyone and then just see if that works?
yeah, sorry, is it bad? How do I mute all? Okay. I'm Zoom stupid. Anyway, the reason this calculator's here is you can see, like, if you had 8 shares at 100 shares at 8, 100 at 7, 100 at 6, it gives an average of 7, obviously, with a sum of shares of 300. I get all in and all out now, so I've simplified my journaling life. I don't have to use this calculator. But if you partial, then you need something like this in order to put your average sell price in. I've got my risk per trade, $100, the number of shares I took, the time I entered, the time I exited. This is an auto calc column, auto calculation. That's how long I held the trade, 44 seconds. The strategy, the volume when I took it, the RVol. I don't actually have these in my journal at the moment because I've struggled with how to score them or capture them, but I want for 2022 to put these in. I've tried it before. I want to get better at it. But when I gave you guys the template, I put these in just as an idea of something you might want to have. And then obviously I have the high a day. In this case, it's 254.80. Level is the level I actually took the trade. So I probably wouldn't trade NVIDIA at 254.80. I'd wait to trade it at 255 where it's more, I'm better at trading at the dollar level. So I let it get there. The high that it got to during the trade, the highest sale price that would show in the chart. And then these are auto-calculated. The stop, how much capital was applied, the result in dollars, the result in R. And then these are levels that were nearby that might have affected the trade. So the pre-market high was at 254.20, so it's just below, which I like. So that should have been a good thing. But R3 was at 255.38, which is the thing I don't like. And that might have been the thing that rejected the trade. But the reason I capture that is so that when I get lots of these rows, this is one trade, one row of information. When I get lots of them, I can go back and assess, like, let me look at all the trades that had R3 sitting just above. Like, let's gather all those and see, like, what was the result? You know, what's the average R I get on trades where R3 is within 50 cents or something along those lines. So
can you elaborate real quick? What do you mean by volume profile? Sorry.
Oh, well, let me open something up real quick. And again, I don't want to make this no high day break webinar because we'll run out of time. But where the hell is it? 1 second. This thing. What I'm talking about for me is there are preferable volume profiles that I kind of want to see. And I have my white steps I talk about a lot. I've got exponential white steps. I've got spike volume, pivoting volume, strong local volume, news volume. These I could probably capture in my spreadsheet just by these, but they're never quite as clear cut. Like, so white steps, you could have 3 white steps or 4 white steps or 5 white steps. So there's different variations of that. Exponential white steps are always nice, but how do you measure exponential out? Like, how do I say how strong was the exponential build of the volume, etc.? I could put something down as spike volume, but how do I capture how spiky it was compared to the volume around it? That's what I mean by a volume profile. That's why I struggle to kind of capture that, because it's difficult to quantify. Some things are very easy to quantify because they just are what they are. The high a day is whatever the high a day was. I can get that to a penny. That's very easy to measure. The level at which I traded at, I can specifically. That's entirely quantifiable, as is how high it got. All of this really is. The one thing that's not entirely dead set quantifiable in this setup here is which levels do I include? Do I include R3? In this case it was 58 cents above the actual high a day and 38 cents above where I played it at. But what if it was 68 cents above, or 78 or 88? Or $1.08. Like, at what point do I say, like, I don't really care that R3 was... That's not the thing that affected the trade, right? So that's a bit of a judgment call that I do currently have in my journal, is I got to decide, like... What I've decided for myself is, if I think these levels had any bearing at all on whether or not the stock made a move, like it got moving in my favor, like enough that I could get my stop to break even, perhaps not to target, but stop to break even, then I'll include them. It doesn't mean they really had an influence. I got to figure that out later when I have a data set of about 50, 100 trades, but I'll capture them for now. But there is a bit of judgment, if that makes sense, that, you know, do I include, which levels do I include, and how close do they have to be? But getting back to our ABCD idea, I just want to like look at this. Like, if we were making an ABCD one, then let's actually copy this so we don't ruin my template here. Let's duplicate this. And we'll call this the ABCD version, and this will be the high a day version. So I don't need like this column, high day, get rid of that. Most of this basic stuff I'd keep, right? You know, the ticker, whether it's long or short. This is all good stuff because that would apply to anything. Strategy, I think, is a good column. Volume, why not? Capture daily volume, whatever the daily volume is when you trade it. That might be interesting. That might be something you keep or not. RVol could be interesting. But we talked about like ATR. So we could put a column in, insert one to the left, and we'll call this column ATR. But what do we want to capture about ATR? Like, actually, I don't look at ATR much. So do you get a value for ATR? Do you get a price level for like I know like average true range, we'll say the average true range for a stock is like $1.27. But if we're trading an ABCD, how do I know how do I know what level above is the ATR level of interest? Does that make sense?
So the way that I use it is I look at the ATR, say it's like $5, and if the low of the day was like $20 and we're at 24, I really only expect it to go up to 25. So if there's not really that space, like if I'm already at like 24.80, I'm not going to take that trade because the average range is.
So in that case, let's just call this a long spreadsheet to simplify things greatly. But in that case, we probably want to capture the low a day then, right? Because we're going to need that to calculate how much of the ATR has been eaten up.
Yes.
And then what we could do is say, if the low a day was...
I would capture both actually, John. I would go like, what's the average ATR for this stock? And then I would place a new column. And the column would be answering probably a question like, from the moment that I jumped in or where my entry was, how much of the ATR was already covered? Or the opposite, how much of the ATR was still to be covered? Okay, so we can have a column that's the ATR. We call it 350. We could capture the low a day, and we could say, I don't know what the low a day was on NVIDIA this day, but we were in at 254.94. So let's say the low a day was 251. And then you want a column that's like ATR covered, perhaps. And that would be, it would be your entry, your buy point, minus the low divided by the ATR, I think. So this would equal, and I'm sorry if I'm busting anyone's brain, but this is kind of the work you got to kind of do sometimes. So this would equal the buy price minus the low a day divided by the ATR, and you need some parentheses in there because of math. Whoops. Okay, because you're looking for it in percentage, because you could do the absolute value without dividing it by the ATR.
Well, that doesn't make sense. It's coming out over 100. That shouldn't do that, right?
Then take the divided by ATR, because you're just looking for the absolute value. You know that the stock covers $3.5 dollars per day on average. So if the low of the day was at 251, here the question is different. You also have to know at which price it started or it opened.
Yeah, but that's true. The calculation is true. You entered at 254.94, which is 113% of 3.5 compared to low of day 251.
Yeah, you've already exceeded the ATR.
Yeah. Okay.
Exactly.
All right. Got it. Okay. So, yeah.
So technically, you wouldn't take this trade if you're doing an ABC.
If we're going by Isaac's criteria, then you were outside the ATR for the day, and okay, yeah. So that's just a metric we could get, and we created this. We made this. This doesn't exist anywhere. ATR covered necessarily. Like, if you go to TraderView and you look at your trade for the day, I don't think it's going to tell you like you are at 113% of the ATR. This is the kind of the stuff you got to create on your own. But this could be very useful for Isaac. You trade ABCDs or no?
I trade a break high of day, but I use ATR to make sure.
Okay, so you could use it the same way. But yeah, this is the kind of thing where you could, once you get 100 trades, you could say, all right, let's look at all the trades I took beyond 100% ATR and kind of look at the average result. And if the average result's positive, you might be like, hey, that's interesting because maybe that's something I'm considering the wrong way. That could actually be a good thing. You never know. Like high a day breaks are actually interesting in terms of ATR because a stock breaking its high a day is often a stock that's going to bust its ATR. ATR is an average. You remember it's made up of bigger numbers and smaller numbers, and the averages can be deceiving. So food for thought. But yeah, and then you have like volume profile. Like so, how do you do that? You know, you could do it very roughly. Like we could do the white steps that I talked about. What else did I have? The expo, the spike, the pivot, the local volume, local building volume, and the news volume. So these could be 6 things I could put in here. Now that's kind of a course assessment, right? This is where you got to apply judgment. Like, okay, is there a minimum for white steps? There might be a minimum of 4. You know, so maybe we got to specify that. You know, I'm not gonna call it white steps volume unless there were 4. And then there might be other specifications for some of these. But this is the kind of thing you could put here, and you could just type them in. You know, just by hand. There are other fun tricks like I'm not sure I've done this in a while, but
You doing like a drop down menu?
yeah, I can do like a data validation thing, right? So we can do, I think this will work. Enter a valid range. Oops. List from a range. Wait, this guy? Yeah, so you can do this Gucci thing called data validation, and now you get a drop down in there, so you can easily choose and you don't have to type. That's just some Excel nerd stuff right there, and you don't have to do that. You can just type it in by hand. The reason why that's nice is because if you ever make a typo typing and then you want to sort, like I want to sort my data by all of my spike volume trades. If you ever wrote spoke instead of spike, you know, you'll lose data. That's why, you know, so data geek people like validated kind of cells like that. And we can do something similar for the SPY. You know, SPY, what else did we have? We talked about the SPY prior to entry and the SPY at entry. How do you describe like what the SPY is doing? That's a tough one. I've struggled with that because I think what the SPY is doing prior to my entry is very important. But it's like, how do you define, you know, is the SPY trending up? Is it trending down? Is it going sideways? That's a really squishy kind of thing. So one of the things you want to be careful about when you collect data is that you don't fool yourself. You have to be able to kind of define it to make it useful. Does that kind of make sense? Because sometimes what you'll do to yourself is you don't want to admit that you entered a trade under like less than ideal conditions. So you go back and you'll look at your trade and be like, all right, I like to enter when the SPY is trending up on a long. And you'll be like, was it trending up? Yeah, it was, you know, and you'll be like, sure, yes, the SPY was trending up. But if you have real criteria, like prior to entry, the SPY had to have 4 white candles in a row of any kind, you know, that could be your criteria for trending up, perhaps. But this is the kind of exercise you want to go through, is like taking that template, get rid of the columns that don't make any sense, and then like think about, you know, what am I looking for in an ABCD? What does Andrew's book say? What do I see on some of the webinars perhaps that are available to me? I think we did an ABCD webinar. Did Amy do one before this thing kicked off? I think he did. Yeah. I mean, just going through taking notes on Avon's webinar, you're going to create a list much longer than this probably. And then you can pick and choose from that, like, what do I want to go after? But I'll tell you what, what's powerful about this is when you have 100 trades and you start to like look at like, let me sort this, you know, let me filter this information, like use the little filter tool and like say, we don't have multiple rows here, but you know, let me filter just on pivot volume, you know, here, and hit, oops. Select all, clear, sorry. You know, you focus in, it won't show anything because we don't have anything for pivot. Oh yeah, we do. No, we don't. But you know, you might have 20 5 trades that come up on pivot volume, and then you can go in and say like we can go to the result for R. What's the average R for like pivot volume entries? Is that significant? That's how you kind of boil this down to the things that work and the things that don't. I was focusing on this thing here, this word pivot. But anyway, enough about this idea. I do have a couple people who wanted to share what they are doing. We had Ricardo and Dash. Either of those guys here?
Yeah.
Oh, that's Dash right in the center of my screen. Okay. Is Ricardo here?
Yes, present.
Okay. I'll let Ricardo go first just because he answered the email first. But I have your spreadsheet here. You can talk off here, or I can share. I can make you the presenter.
It's the same.
Okay.
So basically, curiously enough, I'm doing the ABC strategy and the 1 minute orb, and I decided to create an Excel spreadsheet, as you can see, to start detailing as much as possible the trades that I'm taking on both ABCD and orb. I have a different spreadsheet for the different strategy, as you can see on the bottom left corner, where I have ABCD written down and orb written down. So depending on the strategy that I take, I'll input that specific trade on the Excel spreadsheet. I have a small typo there. Actually, the risks column, it's not risk. Actually, it's the difference between the entry and the stop loss. Risk is normally $35 or $10. It's actually quite small because, at least for the ABCD, it's a strategy that I can take throughout the day. I'm normally trading it early in the morning, but the more I wait, the more I'm realizing that there are multiple data points that I already thought about getting that are showing more often as the day goes by. So going for the column from left to right, I have the normal steps. So the day that I took the trade, which strategy it is, reverse ABCD or ABCD. So reverse it's for the short side and ABCD for the long side. The type of ABCD is through Ayman's criteria. I'm trying to review as much as possible all the ABCD tutorials and webinars that we have. And the more I see Ayman's, the more I realize more stuff and more criteria that I can add. Type of ABCD is one of them. I obviously have the ticker, the entry time, which kind of operation. It's a little bit irrelevant because I'm already mentioning the strategy, but it's an addition. It doesn't take me much time to input it as well. Entry price, stop loss, the difference between entry price and stop loss, the number of shares that I took, which are automatically calculated through the equalized risk per trade, but still, and then start the criteria that I've been creating since the beginning. And which criteria are those? Was the ABC pattern seen on multiple time frames? Those are the time frames that I'm currently looking at. I'm actually going to add 30-minute as well. After that, we have another set of criteria that are related with before my entry. So, and you can see that on the top, before my entry, which moving averages were touched during consolidation. I tried to look to as many charts as possible for confirmation. If those moving averages were touched before my entry, it means that I saw them and so were a criteria for me to jump on the trade. After that, we have did the volume increase or decrease during consolidation? Did the volume increase or decrease after the break? Meaning when I enter, I'm anticipating a break. It depends on the time. If I either enter on the point C, which for the long side is, so B is the high break of high of day or high of day, as we saw previously on Andrew's book and on John's slide. C is the low of the pullback. So I'm either entering in C and the break happens a little bit later, or I'm entering close to the break of B, which is point D, and I'm expecting the break to happen right away. Yes, obviously I will share that with you guys. Yeah, no problem. I can put already the file on the chat, and you can all have it. But here, like as you can see, I have total six or seven trades by now. Obviously, and it doesn't take much time to do it, at least not for me. If you're basically reviewing the trades that you do daily, which you should already, so it's just seeing again the stupidity that you did during market hours or not, or your glimpse of genius of the day. So it's just another way, or another way that you look at your trades. If you have other criteria, please feel free to point them out. I'm always keen to increase my data set. The more criteria I have, the better, even if I find them completely useless. Gathering them doesn't take much time, and it will only prove as good material for you in the future as more trades you're collecting. For the orb, it's something similar, but for the 1 minute orb, I'm finding it a little bit difficult to collect data because you have literally one minute candle of data to collect on open hours. I'm thinking of either starting to collect information from the pre-market or recognizing a specific pattern from the pre-market that helps me out once the market opens and the formation of the first candle. I'm collecting also, John, if you could pass to the second spreadsheet. Yes, thank you. As you can see, it's much smaller. I'm collecting information on the first minute candle, but for now it's only that. I'm finding it really difficult to do the 1 minute orb. I know Dima does 5 minute orbs, which are also interesting because it overlaps with ABCDs on 1 minute, so I would be collecting my both data set would interlink more or less, or it would fit the criteria for both ABCD and orb. I would be doing a 5 minute orb, so also that's really interesting, and I've been thinking about that. But yeah, I just wanted to share with you guys because it's just an idea of data collection for me. I do a little bit of this on TraderView, but it's completely different. I do it by tags. And so I import the information, for instance, on the moving averages that were touched before my entry, meaning that served as a confirmation for me to jump on the trade. I created tags on TraderView, and I basically click on the tags for that specific strategy. Yeah. And this is what I wanted to share. Thank you.
Thanks, Ricardo. Yeah, and it just goes to show, if you look at, he has pretty simple spreadsheets, not a lot of auto calculations and crazy Excel stuff. It's a lot of yes or no questions, just putting a yes and no and X, typing in entry times and things like that. And I noticed what he said about it doesn't take a lot of time. And one of the nice things about doing this work by hand is that it does decrease, it does help your over trading. It really does, because when you take 20 trades, and if you're going to take this seriously, it suddenly becomes not real fun at a certain point to go in at the end of the day and say, I got to do 20 trades. So most of us should be taking, I don't know. I mean, I don't want to fix anyone to a number, but 5, 6, 7 trades is usually plenty for a particular strategy in a day, and it's a manageable amount to go back and journal in Excel or another type of spreadsheet or method. So Dash, this is your spreadsheet here.
Yeah. So
before you get started, I just wanted to show everyone, if I can. So Dash sent me this originally. He sent me kind of his output of his analysis, and I just wanted to show. I mean, he has some really beautiful charts that the raw data he collects generates, the pie charts and bar charts and line charts and things like that. So this is the step on the back end. When you collect this is the magic you can produce. And I told Dash what I wanted to see tonight is not the analysis that comes out of it, but the raw data. So he was going to talk us through that. If I can get this window out of here. Thanks, Dash.
Yep, thank you. So what my strategy is called VWAP break. I actually break down. What I do is I just wait for the price to go below the VWAP and then I short. This is the only strategy I'm focusing on right now. I actually have 2 journals, well 3 if you count OneNote. The first journal is where I put all my entries and exits, how many hours. So that's more of a performance journal. And this one is very specific to the VWAP break strategy. I just saw the need that, yes, I need to figure out what is happening for this particular strategy. So all of these columns above are very specific to this strategy. For example, the first few, the sim replay, by the way, I also take trades in the stocksimulator.com, stocktradingsimulator.com. So I have to mark those trades as replay. When I add them, I can share this on the Slack group after the meeting. And then obviously date, symbol, strategy, position, winners or losers, and then whether the stock was above or below VWAP. Because my strategy, it looks for a push above VWAP. And I've noticed that if the stock is above VWAP, the push is happening. The push happening is much, the probability is higher. So that's why I track this. And then the confidence level, this I started tracking just to see how I feel when I enter a trade. And surprisingly, I don't know, John, if you have the analysis sheet in this, but all my loser trades, my confidence level at entry was less than 50%. So that just tells me that if I'm not confident enough, I should not even take that trade, right? And then where am I getting out? I plan to use this for working on my targets. I tend to partial way too early. So that's why I have this, and then SPY dependency, and then number of candles for break after the VWAP break. What I'm looking for is a push down. So I'm tracking how long does it take. So this, both column K and column L, no, I don't record my confidence prior to your entry because I only take like, Isaac, for you, I only take maybe 3 or 4 or maybe at max 5 trades a day. I actually just remember, okay, this is how I felt during that trade. When I go back, if I get a chance, if I'm comfortable doing that, then I'll do it. But yeah, this is the kind of analysis that I get from that. So as you can see, all my losers have less than 50% confidence, which tells me that, yeah, I should not be trading that. And there's others like strategy violations that, okay, you can go back. Okay, thank you. And then the number of candles. This, I'm working on how long should I be holding a particular trade. What I've noticed is once I enter a trade and if it's more than, let's say, 5 or 6 candles, then I should technically get out whether or not the drop has happened or not. So that's what I'm trying to get data for. And then obviously time, actually this was a conditional formatting. I don't know, the formatting changed, so everything is pink. Now early entry again for violations, I do not trade before 9:35. So if I do, it counts here and then I track my violations. So the time that I added this, I've not had violations. So that's good. Then the 9 and the 20 MA cross, that's something I had not added up until recently. And I think this is a key change for me. And if, again, we go to the analysis, you'll see that when the cross actually happens, my win rate goes up. And there's a higher probability of the drop happening when the 9 crosses the 20 in the downward direction. So this column changed the game for me completely. So right now I'm in the process of gathering more and more data for this. Yeah, the bottom right, moving average crossing. So if you see there's no 920 MA cross, that's the red. Those are all losers. So I used to get into trade when there was no cross, and then those trades would not go in my favor. And whenever there was a cross, they would turn out to be in my favor. Obviously, like today I traded SQQQ and it did do the cross and it still did not work. That's fine. But I traded 2 other stocks and both of them had the crosses and they worked. So I have a 66% win rate today. Right? So this just told me what I have to do. I literally added that statement in my trade book today that I have to wait for it. Okay. Okay. Can we go back to the sheet? Okay. And then, okay, open and closed above VWAP. Sometimes, I've seen that the price would come up, cross the VWAP, and then immediately push down. So this is a condition that I put, that the price has to open and close, if possible, above VWAP. That means that now the price is going to shoot up. So I need to get out of my short position. And then I'm keeping track of volume. I don't know how I'm going to use it, but I'm just keeping track. I do want to add like stuff like ATR and other stuff that I can use for my exit strategy. That's what I'm struggling with right now. So going forward, I'll keep on adding more and more stuff to this and just see how the data pans out. That's it. Any questions?
So Dash, do you ever wait for the price to drop below VWAP and then have it retrace back to VWAP and then enter if it doesn't cross VWAP?
So good question. So my trade book, one of my rules is I have to wait for the price to break. The breaking candle has to be full bodied and not like a wiki candle. And then it has to stay below VWAP for at least 1 or 2 candles. If the price stays below VWAP for 1 or 2 candles, then and only then I will enter. And then if the price crosses the VWAP after that, I'm getting out. But my stop is actually at the high of the breaking candle. So what tends to happen, and this is what I captured in my other journaling sheet, is that my average loss would be around like 0.5 or 0.6 R. I would never lose my 1 R.
Okay.
Unless it's like a straight up jump, then I can't do anything.
All right. Makes sense. Thanks.
Yeah.
Talking? I'm on mute. Dash, that was awesome. Ricardo, that was great stuff. Both of you, really appreciate that. That's exactly what I wanted to show tonight, is that those 3 things, that raw template I sent, that can be changed to suit your own needs. And then you look at these 2 guys that are using these spreadsheets every day to gather this data, and Dash is showing the back end, or not the back end, he's showing the result of this data. You can make a decision about what's working and what's not. I'm sure Ricardo's doing the same thing with his data as well. And that's what I do too. And I know not everyone's comfortable with spreadsheets. They're not as nasty as they seem. And once you get just a couple, once you just do the first little calculation in a spreadsheet, your first column is a number and your second column's a number and your third column, you're like, I'm going to make this column the sum of those 2 columns. You'll be amazed. You'll learn so fast about what you can do, and you can make all kinds of interesting metrics and parameters about things that are specific to your strategy. But if you go back and you look at what Dash is doing, and Ricardo, but I'm thinking just back to Dash, about watching things at VWAP, like TraderView's not doing that for you, or like whether you entered or below or above VWAP. It's just not captured. Trading software or journaling software doesn't know what you're doing, really. That's the downside of it. It's great at generating general statistics, but it had no idea that Dash is trying to trade some kind of VWAP movement, a VWAP break. So that's why he has to go get that information himself, so he can make a decision about it later. That's
yeah. And I would just like to add, John, I know there are people who are struggling with Excel and Google Sheets. If anyone needs help, just hit me up on Slack. I'll be glad to help.
Yeah, same here. If you guys ever want to send me a sheet and say, look, I'm trying to do this thing, I'd be happy to help. Thank you very much for that, Dash. Yeah, we have spreadsheet smart people. We have people that really haven't encountered this in their life, and we can all get there by the end of this. So hit us up. Yeah, hit up Dash, hit up me. Anyone else that's willing to volunteer, throw it out there in Slack, and we can get each other.
I don't charge you much for helping on Excel.
technically,
and also I think like I can say that it's the best task in the world, obviously, but it's for your own sake. So at least for me, I'm trying to build a career out of this. So the more I collect, I know that the higher the probability of my strategy to succeed, and the higher probability that I can use it in the future forever, maybe, and just keep tweaking it. So if your goal is more or less the same as mine, this is for your own good. It's just until you input it on your routine, and it's so automatic to go to your Excel spreadsheet that you don't even notice that the time passes. Until then, obviously it hurts a little bit. I won't say it doesn't, but this is a marathon, it's not a sprint, so we're all on this together. So the more spreadsheets you guys do, the more I'll do as well. So let's keep getting it.
yeah. Thanks, Ricardo. Any last questions or comments before we end this?
Yeah. John, I had a question.
Yep.
Say you have a day like I had today where you say, okay, my strategy's not working. Screw this. I'm going to start scalping and get some of my fake money back. Do you put that information in the spreadsheet, or do you just say that's garbage data? There's really no reason to collect it.
Well, I mean, it kind of depends how you consider that. Like, if at the end of the day you're like, I'm a smart trader, I came out green, and the good decision was to just start scalping. If that's the way you think about it, then you should, because you're making it real in that sense. Sim is kind of weird in that regard. I understand some people can mentally shut off. Like, I tried my strategy. I took the 5 swings of the bat or whatever. I have my results. I have information analyzed. Now I kind of want to go screw around and see if I can like make Facebook's earning play work out for me, because it's fun to see like a big P&L. I get that. No, I probably wouldn't catalog that, but if you get into live trading, everything counts. Everything. You have to record what the hell you're doing and why you're doing it. You know, and of course, I recommend always sticking to your strategy and not. I know a lot of traders that do that. They're like, all right, we're gonna try my ORB in the morning, and we're gonna look for some ABCDs, and then in the afternoon they're like scalp. Ah shit. You know, like they're just messing around, and you know, we don't recommend that in the first place. But when you get into the world of live trading, you need to take account of everything you're doing, because when that scalping starts to eat into your account, you need to understand why. You know, when you look at your account and your account's $5,000 lower than it was, you know, 3 months ago, you need to understand that it's the scalping perhaps that's doing it to you.
Yeah, the main thing I was thinking was, you know, we're after data here to see how our strategy and how we're performing, and whether there was even any value. And you know, I of course I'm going to log everything in TraderView, but if there's any value in actually moving all that over to a spreadsheet, you can sit there and say, well, this is how much, you know, it cost me to go off the rails today.
Yeah.
And you know, and also, do you put any psychological information in your spreadsheets?
Well, you notice like Dash did. He put his confidence level in, and that I shy away from this. I call it the squishy stuff, the gray area stuff, because I'm just, this is the way my engineer mind works. Like, I want to be able to measure everything, and so like Dash might do a very good job of self-assessment and confidence. Like, there's some people who are just good at it. I don't think I'd be very good at assessing my confidence, because I tend to be overconfident, and I'd probably be like, oh yeah, that was a good idea. Yeah, it's confident. You know,
I'm not confident. I just go by 25%, 50%, 75%, 90%. That's it. I can't go in.
Yeah, so Dwayne, it's really about how good you are at doing that. Like, if you had Kreda self-assessing herself, I imagine she'd do a pretty good job of it in terms of psychology. But she's also trained in it as well. But if you think you can, then capture it. I don't want to take anyone away from it like an idea.
For me specifically, Dwayne, I took Dima's violation list and I created Ricardo's violation list, and I also do it every single day. So if I did that, for instance, I would say I have a little row that says I stopped trading my strategies and went ballistic on scalping, for example. And how many times did I do that throughout the day? And I put a number, and then at the end of the day and of the month, I see or highlight the numbers of the mistakes or violations that I did the most, and I try not to repeat them on the next month or next week. So I also take that in consideration in a different Excel that Dima provided to everybody, and I made my own Ricardo's violation list.
I'll tell you,
All right.
Dwayne,
Good
I
stuff.
think you do yourself a better service to trade what you want to trade the strategy you're working on, and then spend the day going back and making sure you journal it properly in a spreadsheet. And if that scalping, screwing around time is eating into the, like, I should be capturing my data better time, then you're kind of doing yourself a disservice. But yeah, I mean, if you look at my spreadsheet, there's a column for strategy, so I could always put break a high day, and then I could put something like screwing around, and I can always filter it down to just the high day breaks and see how I performed with that. Where it gets a little weird though, sometimes when I see the equity curve that comes out of your DAS. So if someone comes to me for help and they're down like $10,000 in boot camp, you know, I'm like, okay, you don't look like you're trading very well. Let's try to figure out what's going on. And then they bring up, well, here's how I'm doing it with my strategy. It's really kind of break even. And I'm like, well, what do you mean you're break even? You're down $10,000. And then I find out that, like, yeah, their strategy's not terrible. They are kind of a break even when they're doing what they're supposed to be doing. And then they're like blowing money for the rest of the day. So I get kind of a mixed signal sort of we got to kind of work through. Not something that we can't figure out, but that's another kind of detriment to just messing around with that account.
Right. All right. Thanks.
Yeah. All right, guys, I got to bail. I got to go make dinner. Getting the nasty message from my wife because kids got hockey practice, so we got to get going. But this is a great meeting. Thank you very much again to Dash and Ricardo. And it's the kind of input I'm looking for people in the future. And we're not always going to be asking for input from people who are like crushing their ideas, but we're going to have sessions. We're going to ask for input from people who are new and need to learn and struggling, and talk to those kind of people as well. So everyone give a chance. All right, guys, have a great night.
Thank you, John. Thanks, everyone.
Thanks, everyone.
Bye.
Thank you. Bye bye.